Hey, good morning. It's Wednesday. Let's go. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, good morning. How are you doing? It's a Wednesday, the middle of the month, 13th. I can't see that. What the heck? 13, I guess. Wednesday the 13th. 2019 Daily Forex Trading Strategy Session, hosted by Forex.Today, sponsored by TradersWay.com. Thank you for being here. Thank you for subscribing, and if you have not subscribed to the Forex.Today YouTube channel, then please subscribe. So when I click stream, it goes, "Pachow, hey, Wayne's doing a stream. Would you like to do some Forex trading with us?" Then you click a button, boom, takes you right in. Usually. So anyways, it's not like you're giving me your email address or your mother's maiden name or something like that, so I can't email you, spam you, and all that kind of stuff. You're just part of the crew, part of the family. Yeah, the exams went well enough. I don't have my grade. In retrospect, I would have liked to have gotten, let's say, 3 more answers correct. But of course, 3 of the questions are stupid, so I don't know. But anyways, thank you for that. What did I do to the mic? It's crystal clear today. I didn't do nothing to the mic. So anyway, yeah, thank you. Did I kill it? No, I didn't kill it, but I did, in my practices, I basically did the same. So I think there's about 3 questions that I don't think were clearly articulated in the lectures for sure, like really probably weren't in the lectures at all. So 3 BS questions. So if I had not received those 3 BS questions, I would have, but it's funny though, right? Like when you take an exam, there's 50 questions. I have 60 minutes to do the 50 questions. It's not a lot of time to do a lot of thought, especially when it takes you 30 seconds just to read the question. And then I'm a little slow, right? So I have to read the question again. So it takes me twice as long to do anything, and that's not good on a test like that. But every question, you have something like an 80% chance of getting them wrong. Right? So if you've forgotten what it's like to be in college, because it was multiple choice, but probably too many questions. I would have liked maybe, I don't think I would have needed it, but another half an hour would have been great. So anyways, hey, welcome to the world of Forex. Good to see you. I hope you're feeling good. I hope you're feeling strong. I hope you're feeling confident. Brexit, Brexit, Brexit. Told you. So we'll see how that ends up, if ever. Self-inflicted wounds, though, huh? Yeah, Liam, no, that's just one class. Of course, to get on the dean's list, you have to be an A student for your entire college career. That's a little difficult. I also signed up for extremely difficult classes at times, probably a little foolishly, but anyways. All right, so I thought I'd do something a little bit different today. I thought we would go through Commitment of Traders report. I don't want to talk about British pound. But I thought we'd do a commitment to traders report today. We haven't done that in a long time. Any thoughts on that? We can still do gold and oil, US dollars, and JPY if you want. That's fine too. But I thought I'd squeeze in some COT. And I guess the only other thing to do on my to-do list is invite you to visit tradersway.com, open an account, join the family, download MT4, then come back to this video. You can download my chart templates, pop it in there. My charts look like your charts. You got yourself a broker that cares. Amazing, right? A broker that cares. It's absolutely amazing. But hey, they make these webinars available to you for free, so that's really cool. Make sure you pay it back, huh? Good. Right on. Glad you guys agree. So, to get this commitment to traders report, visit Forex.Today and click over here. I thought we should do the calendar first and then do COT. Okay. The way that this calendar works, this red line is where we are now in the week. So here we are, Wednesday, March 13th. Industrial production has happened out of the Eurozone. And we're coming into PPI today, durable goods today in the United States of America. China news, Chinese retail sales, foreign direct investment, industrial production. This is a big Asian session tonight, obviously, right? So that's going to impact the value of the Aussie dollar. It's going to impact the value of the Japanese yen. Okay. Tomorrow is a moderate day. We do have a Bank of Japan interest rate decision. Of course, nothing's going to happen there, but maybe they say something. And then going on Friday, European CPI, but they don't have any inflation, so don't worry about that. I mean, look at, what is this, a negative 1%? So I wouldn't expect anything amazing going on there. Just another opportunity to trade euro. So that's cool. So nothing really in the way of a smooth end to our week, which means Wednesday, Thursday, Friday. The big thing I would say is tonight's Asian session. Okay. Let me ask you, how many people here are fairly new to the commitment of traders report? Like, you've heard of it, maybe you've looked at it, maybe you've studied a little bit, but you're curious in learning more about what COT is. An inside week in terms of swing trading is essentially a sideways moving market, a trendless. It's not trending up, it's not trending down. Okay. Mike hears background music. Is there background music? Does anyone else hear it? But total noob. Is that right, K-Star? Kevin, I thought you would know. It's interesting. Heard about it, don't know how to utilize it, know about it, never used. Oh, cool. Cool. Right on. Well, first of all, this is information received by the United States government every Tuesday. And then, once they have the data, they compile it into a spreadsheet. No joke, it's just a spreadsheet. And it's released every Friday afternoon. So some of you hear music. Is it plausible you have more than one iteration of the webinar running? I might. No, this is the only window. This is the only browser I have open. So I don't know why you hear or static. Am I too far away? Hello? Let's see if I move closer. Is this better? Am I just too far away? Huh? Better? Thumbs up? All right, we'll see. I feel like I'm way wicked close, but no music here. Okay. Yeah, it probably has to do with what band you're watching it on, whether it's low def or high def or something like that. Well, all right, some people say it's better. Well, I haven't changed anything unless, YouTube changes things weirdly. Is this acting as a mic? No, that's not acting as a mic. Hello? So why don't I... Huh. So I'm trying to get it, but... Is it possible you refresh and it helps? So anyways, yeah, so Alejandro says, hey, so like a 3-day delay on the release. Yeah. So is this going to help you with the scalp? No. Is this going to help you with the trade today? No. Yeah, but can you hear me now? Yeah, okay. Thank you, J-Dub. Okay. All right. So anyways, yeah, so it's not going to help you today. It's not going to help you with a scalp or a spot trade. Oh, so can you hear me at all now? All right. All right. So I'll just keep going. I don't know what it is today, guys. Sorry. All right. So what good is it? Well, let's go back in history. Okay. What is it? What is the Commitment of Traders Report? Well, this goes back to the futures market. Okay, futures trading. This is things like wheat and cotton and sugar and coffee and gold and that kind of stuff, right? The futures trading pit. Frozen concentrated orange juice, right? It was the Dukes. It was the Dukes. Okay, cool. And the government realized early on that the futures market can create, well, first of all, 99.9% of the time, it creates a way for commercial users of commodities to hedge against fluctuation in prices and all that kind of stuff. But if the market gets all wacky, where like everyone is long or everyone is short and there's no one on the other side of the trade, things can get dangerous. So the government designed a way to track and measure the market. And it's actually quite clever, so I doubt someone from the government actually did it. But anyways, yeah, pork bellies. Cool. So let me try to explain how we got here, or how it's all reported. And my drawing tool just went away. Hello, drawing tool. Oh, you're over there now. All right. All right. So the government came in and said, hey, industry, we want to know how many hedgers there are in the market. Okay. This is important because those in the whatever market it is, again, if it's soybean meal futures, some people are buying it to make money. Some people are buying it not to lose money. Some people are selling it not to lose money. Okay, so there's a difference between for profit and not for profit, so to speak. Okay, so to be a bona fide hedger, you might be a cereal company that buys wheat and corn and sugar to make cereal, and then you sell the cereal. Okay, so when prices are rising, you might be hedging because you don't want prices to go up. Well, what does that mean in that case? Well, it means if prices are rising and you're hedging, you're buying, but you don't actually want it to go up. But when prices fall, you don't use the buy. I should have said you were buying futures contracts, because you're losing money in the market because prices are going up. Things are getting more expensive. You can't raise prices on the shelf at the grocery store. Imagine if every time you went to the grocery store, cereal could be $3 a box. It could be $5 a box. It could be $2 a box. You just, every time you go, every day prices have to be updated. Well, that's not very efficient as a society, right? And very much unwanted as a society. So anyways, to offset that risk, those that sell cereal at your grocery store, they say, okay, we're trying to keep prices stable. So if prices go up, we don't want to have to raise our prices at the grocery store. So instead, we'll buy futures contracts that put us in a situation where if prices go up, we make money. Okay? And that offsets any sort of losses somewhere else, because you still have to buy the cereal. Every day, I mean, you have to buy wheat or corn or sugar. Those are your input costs. Okay? And if prices go down, now you're going to make profit. But you have these long contracts, now you're losing money there. So now the money you're making from your prices falling, because now you can sell cereal at a higher profit, you're losing that higher profit because you bought all these futures contracts that are now losing. So you lose money in the futures market, and it takes away the profit you made in the cash market, and you locked in that certain price, right? Or if prices go up, you make money in the futures market, but now you're losing profit in the cash market. So the money you've made in the futures market offsets the losses in the cash market, and you're hedged. So the government wants to know, hey, how many hedgers are there? And the way they say that is, hey, hedgers, why don't you tell us if you're in the market, report your position, and if so, your taxes will be lower or even free. Okay? Now, there are also very large institutions that trade the futures market simply to make money, like a fund. These are traders, right? They're in the market to make money. They have no intention, let's say, to buy a wheat contract and take possession of the wheat. They just want to buy the contract low, sell it high, and off they go. And so this is required by law for large investors. And I can't remember what it is, 200 contracts or something. Large institutional traders that are buying and selling in the market, they have to report, it's required. Their taxes are higher. So these guys are required to pay. These guys are required to report. These guys are required to report. And if you're a bona fide hedger, you're incentivized to report, even though you legally have to. You're also incentivized by saying, hey, we'll make sure you don't pay taxes on it because you're making money or losing money, but not on purpose. These guys are making and losing money, and that's on purpose. Okay? Then you add all this up, and you get a number. How many hedgers, how many speculators? And then you also look at another number, and that is the total of all contracts being traded. Now, these are large institutional investors trading more than a couple of hundred contracts, futures contracts. But it doesn't, right? But it doesn't mean that's everybody in the market. So now you can go to the futures exchange and say, hey, how many contracts were traded? Let's say there's 1 million contracts. We know that because the exchange, right, is the middleman, so to speak. They see all the contracts exchange hands. And then you find out, let's say 400K are bona fide hedgers, 400,000, right, are non-bona fide but reporting traders, so they're speculators. Okay, and then what's left? $200K of dumb money, aka you and me. Non-institutional traders, the dummies, the retail traders, the scum of the earth, right? And trust me, the people that regulate our industry think that. Anyways, so that's us. And we get that simply by looking at the total, subtracting the reportable. And now you have 3 groups, basically. Commercial hedgers, commercial speculators, and dumb money. That should add up to total. And that's reported every Tuesday, or gathered by the government every Tuesday, right? So on Mondays, if you work at a big institutional commercial buyer that's hedging, every Monday you probably get there to work and you run reports for last week and you compile them, and you're required to give that data to the CFTC, Commodities Futures Trading Commission, because that's due by Tuesday at the latest. Then the CFTC gathers the data from all those who are reporting. Again, this is institutional speculators and institutional hedgers. And that gets compiled and released Friday afternoon as the Commitment of Traders report. Okay? So it is stale data, but it is relevant. So we're macro traders. You can consider this as a form of macro analysis. Okay? And now we can run this through who's buying Euro futures contracts. Remember, this is just Euro futures contracts. It's not Euro cash, and it's not global. Euro futures contracts traded in the United States of America. Great British Pound futures contracts traded in the United States of America. Japanese yen futures contracts traded in the United States of America. Greatest country in the world! Right? So, it might be helpful. I will give you an example if you don't mind. Okay? I will break all this down in a second. Okay? But I'll give you an example. I have seen and reported to my webinar audience euro going up. I'm not saying it's going up now. I'm just saying in the past. When the sun don't ever shine. I've seen euro go up and no one buying. No buyers. I've seen a trend like this this is euro, by the way. I guess I can do it like this. I've seen situations where this went up for weeks and weeks and weeks and weeks. Euro got strong and there were no buyers. Now put that in your pipe and smoke it and see what see what vision appears. What happens? What creates a situation like that? Oh, it happens. But it's very useful information because ultimately you're trying to decide to do this or do this. Are you a buyer here or are you a seller here, right? Kind of thing. And this data can definitely give you an idea whether you should be short-term long or long-term long. Short-term short or long-term short. Okay? And then, of course, the other thing, because that's sort of like relative. The strength is relative to something, right? Well, how about this? Another, and I guess more traditional way of using the Commitment of Traders report is to look for extremes where everybody and their mama and their mama's mama is long a currency or short a currency. No, central banks are not buying futures contracts. Futures contract. You're not buying cash. You're buying a futures contract. Okay? Probably have your phone too close to the computer. Why would that matter? Am I logged into a webinar with my phone? No. All right. Let's dive into this. Let's dive into this. Are you guys intrigued, by the way? Or is anybody lost? You're like, I still don't get it. I mean, I'm going to now pull it apart. We're going to look for speculators and hedgers and all that kind of stuff. I'm going to pull it apart. But, okay. Kevin says, isn't that counterintuitive? Oh, yeah, that's why it's wicked awesome. Most people won't understand. Okay? Most people won't understand. That's great for us. Good. Good. But we can break this down and make sure you understand. My girl, won't you lie to me? I'm trying to... that ain't gonna work. Tell me, where did you sleep last night? All right. Boop, beep, beep. Thank you, Jean-Guy. Well, Kevin, no, I didn't say people were buying contracts. I just said the market was going up. The phone close to a computer creates static? You're crazy. There's no way that's true, Liam. Anyways. All right, cool. Anyways. Let's get into here. It's hard for me to see some of these colors, but I got to highlight them for you. Okay. All right. So the key is here. Okay. So we are now looking at the Euro USD. How do I know it's USD? Because they're futures contracts traded in the United States for American money. So they're all against USD because you're trading in America. Okay, so that's the first thing. So we're looking at euro versus the US dollar. You may recognize it by this line. So it says weekly close price. Okay, so this line here, okay, you see all these little dots I'm connecting? They're weekly prices. Okay, at the end of the week, this is the price of the euro dollar. Okay? Now, it's backward looking a little bit so that you might look at it and say, that's not the price today. No. It's but recent price. That's the euro dollar. Okay? We were way up here, now we're way down here. So it's moved 1,000 pips. Is that right? Yeah? All right, cool. So that's the first thing. Okay, so you kind of have to like look at it and say, oh, cool, so where are we now? Okay, great. The next one that you want to look at, and maybe let's do this in a slightly different color. Long, okay. Now, are these hedgers? No. Let's hope I got the right one here. Is that the right one? I'm pretty sure. Yeah. Sorry. Okay. These are large institutional speculators. Remember, we know they're not hedgers because they don't report as hedgers. Is there another word or another term we can use for large institutional non-hedging? Can we just call them institutional traders or hedge fund managers or something like that? Okay. So those are speculators. But specifically, they're long. Now, there's another thing, and I find it very hard to see. I'm going to do it this way. There's another line here, week over week over week over week or week over week. And what does that line represent? Short speculators. Okay. The blue line are buyers, the number of buyers. The orange line is the number of sellers. So let me explain it this way. We're looking at the number of sellers, right? We're looking at basically the distance between these two. And at this point in here, we have more sellers than we have buyers in the market. And by the way, this isn't people thinking about it or feeling about it. I feel short. No, this is money in the market. So from this point here, you can see there were more bulls, but the relative direction was more and more bears, more and more bears, more and more bears. For this amount of time, it was basically moving sideways and basically down. And we're still adding sellers. During this period, and let me highlight it this way, during the same period, how many bulls have we added to the euro? About as expected, Peter. I would have liked a little better, but it was all right. Probably an A-. So, how many bulls were added to the market since September? September. No additional buyers. Okay, let me use a different color. Buyers in September were at this level, or sellers at that level in September, and now we're up here. So we've gone from 120 to 125, but the volume is actually here, right? So we went from 175,000 short to 250,000 contracts short. So do you see that we've added bears, but we have not added any bulls? Bulls. Okay. Relative change, 0. Bears, relative change, that's 75,000 more bears. Oops, that's supposed to be 75 plus 75,000. Okay, so let me ask you, can you start to see now that this could be helpful information to figure out the sort of the structure of the market? No, Mike, that is a silly way of looking at that. Okay, it's only telling you relative information. Correct. That is correct, Kevin. But you can probably get a general idea of what's going on. That's a pretty large market to measure. Doesn't include European point of view. But now you can start to look at things, right? Did we lose any bulls since September? You could even argue June way back here. Not much has changed statistically speaking. Right? So you're starting, can you, even if you don't see it, can you sense that it might matter to know whether the market is adding bulls or adding bears, or losing bulls or losing bears? For example, what happens if, let's do it this way, bulls, bears. What happens if number of bulls goes up and the number of bears goes up? What happens? Well, they kind of offset each other, and you have to ask yourself, well, how many bulls versus how many bears? But what kind of market? So let's do here, market. What kind of market comes out of that? Well, we're not really sure, but it's essentially sideways. It could be a little up, it could be a little down, depending on the magnitude of up or up, okay? What about up, down? There are more bulls and less bears. What if there's less bears, less bulls, less bears? Okay, and then lastly, more bears, less bulls. Okay? So now it could be helpful information more than just price. Okay? Okay? Because there will be times, so let's talk about the time when euro went up and no one was buying euro. How could that be? Well, buyers, so let's say, so longs of euro was at least flat. But bears were down week after week over a long period of time. What happens to the market if we have less bears and nobody buys? Yeah, Liam's getting to it. Bears took profit, but at the very least, we know the bears are simply getting out. Well, the magnitude. So it's not actually sideways, is kind of what I'm getting to. It's not really true because the brokers are offsetting the short positions with long positions, okay? So actually what happened for a long period of time was the euro was going up. No one was buying, and everyone and all the bears were dumping their short positions, which then gets entered into the market as a long. No one was holding it down. No one was buying, but no one was holding it down. Now, does anyone here remember this period? It was, I would say, I'm guessing it was about 6 months that the euro dollar went up. But let's say at least three. Certainly 3 months. Where euro dollar went up and nobody was buying. Does anybody remember that? We went over it quite a bit. And the output of all of this, guys, was get ready, because whoever shorted it and made a lot of money is going to want to short it again. They're just waiting. So we need to identify key levels of resistance, confirm respective resistance with technical analysis, and wait for the bears to re-enter the market and we can sell. So Henley remembers. I don't know if it was last year or the year before. Does anyone remember? But it was really clear. I talked about it a lot. Well, Kevin, there's probably a multitude of reasons, and this doesn't give you any reasoning. It's not a survey, right? So all we know is we're looking at, let me clear this. What we want to look at is what are the bears doing and what are the bulls doing? Okay? So in this case, probably sideways. What are the bears doing? What are the bulls doing? Probably sideways. But sometimes you get what are the bulls doing and what are the bears doing, and you can have more confidence, meaning you're actually getting less bears and you're getting more bulls. Okay, so anyways, this breaks it down not just to price, but who's moving the market. Was it? Thank you, Ed. Okay, this helps you understand perhaps the reasoning, perhaps the reasoning. You don't know why they're getting out, but you know that they are getting out. So let me kind of look at this again. I can't see it on that other angle because of the lights and stuff. But let's do, okay, longs and shorts. Who's in control of the market? Well, nobody's buying. The black one are buyers. So let me get my handy. This is buyer. Ah, stupid. This is buyers. This is sellers. Nobody's in control of the market. Isn't that funny? Buyers are not in control of the market. They're not buying. Nobody's buying euro. What about sellers? Well, in this case, it is sellers, right? Because there are more sellers. The number of sellers is increasing. This is a seller's market. Okay, this is a seller's market. And if you find it really difficult to measure the distance between these two, I have good news for you. Net positions. So bulls minus bears. And that's this line here. Cool, right? So if I look at that, and the number of the number of bears is rising, or the number of bulls is falling, or both. And look what happened to price. So with a solid foundation in understanding the Commitment of Traders report, you can discern whether you should be aggressively bearish or conservatively bearish. What I would like to see, for example, let me change colors again. So we have number of bears going up. You know, it'd be killer if the number of bulls did this. Less bulls, more bears. Isn't that crazy? Oh, Tongo, I'm sure it could. I'm sure there's indicators that just grab the CFTC data. I used to download it from the website, so I don't know what it looks like now. Maybe the CFTC even uses it. But I'll tell you, this version here that you're seeing on the Forex.Today website is, I think, the nicest one that I've seen. Maybe there's newer ones, but hey, man, I used to do this 15 years ago, and it was just an Excel spreadsheet. And then there was a service I think I paid $300 a month for, so that they turned it into charts for me. And even then, there were way more lines on it than this, and it was very difficult to read. So if you're scratching your head on this one, and you're like, man, this is difficult to read. Well, at first it is. I give you that. It's not easy straight out of the gates. But this is nice. Chuck Duck's like, this is the nicest version, easiest version you've seen. Yeah. So this is really helpful. It's on Forex.Today. Just click on COT report. Okay. So the best, I got to change colors. It's terrible. So the best bull market is bulls up, bears down. Okay? Number of bulls going up, number of bears going down. Next one would be bulls up, bears flat. Okay? They're not fighting you, but they're not running away either. So this will be less bullish. This will be more bullish. More, less. And I think you could carry this through and do the same thing for bears and all that kind of stuff, right? This is number of contracts. Okay. This is euro dollar price. Yes, so if the number of contracts haven't changed, there's no new buyers, no new sellers. You see that, Kevin? We're trying to see, are there new buyers in the market? So let's take a look at that question now. Over that week period, did we add bulls or did we lose bulls? We added some bulls. Or over that same week, did we add bulls or did we add bears? We added bears. And then you can look at the magnitude. Slightly more bears. So I'll give it a plus mini plus. Okay? So just slightly more bearish than bullish. Should I be on the panic button? No. Right? But what do you think will happen if we have this in bears and then 1 week you get this on the bulls? Okay. So now you'd have more sellers and significantly less buyers. Okay? And that's incredibly important. So let me wrap this up with this. It happens to be extremely important when there's a long trend and it's at an extreme, and then you start to see a turn on the other side of the market. And then in the cash market, so like this thing, you see like a double top at monthly pivot points, for example, and then suddenly there's an increase in bears and a decrease in bulls. This is coming down hard because you can actually see more bears jumping in at a double top at monthly resistance and bulls taking profit and getting the hell out. So you have nothing left but bears. You understand? So Kevin, it's people voting, sharing their, as you say, consent with money. When you're at a double top, a big one, like we'll talk about a monthly pivots. So we know it looks something like this. Pivot profit zone, right? And you're wondering what to do in here, and you see all the bulls get out and new bears enter. So there's no bulls left, right? All these guys have exited, and you got new sellers selling here, selling here, selling here, right? Well, you can see how long the contracts have been there if there's no change. Look, nothing. Just in this period here, going back to the middle of November, nothing's happened. No buyers, no sellers. Holy crap! Well, I shouldn't say no buyers, no sellers. This is the gray line, right? No one has bought this. No new buyers. And no buyers left. The same buyers have stayed in the position since November, doing nothing. These are futures contracts, Harley. It's not cash position. They don't have to offset. Okay. It shows number of contracts, not number of buyers per se. So like I said, to figure this out, to separate hedgers and speculators and retailers, they looked at reportable hedges, reportable speculators, and the total number of contracts minus the hedgers minus the speculators equal retailers. So now you have hedgers, speculators, and retailers. That's number of contracts. These things. And then they can break them out. Are they buying long contracts or are they buying short contracts? And you just go bloop, 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 right? Because they have the total and then they have the verifiable, reportable. Okay? Yes, yarn. They're standardized contracts. So again, they're not going to put you in a trade today, but very often they will help explain what's going on in the market. And there has been a time recently, 2017 apparently, when the euro dollar went up and nobody was buying euro, but everybody was exiting the dollar. There was such a wind up on US dollars because of the central banking policy. And then all of a sudden, for about three to 6 months, there was a complete unwind of dollar longs. No one, right? Just an unwind of dollar longs, which then made the euro rise. But nobody was buying euro. Okay. So there's your Commitment to Traders report, available at Forex.Today for free. Check it out. And remember, the calendar was here too. And just one little sort of tip with the calendar. You can go this week, next week for planning. You can look at tomorrow for planning. You can look at today, just to simplify things. So that's what's going on today. This is what's going on tomorrow. This is the whole entire week, which you should do on Mondays. And then when you get to Thursday or Friday, you should probably start planning out next week, right? And then you're like, I only want to know high impact events for next week. Next week, high impact events. Okay, boom, 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 boom. Nice. Looks like a good week next week. Okay. Cool. Well, now you would know, Kevin. If if everyone's exiting their dollar long positions, now you know because you see it. And now you know that even though the euro dollar is going up, once the unwind stops, which again the commitment of traders report will show you, you should probably get short again. Okay. All right. What's the time? So, anyways, hopefully maybe you thumb up that. Did you do the little likey thing? Well, the thing is, nor should you expect it if you haven't seen a difference. But we've seen more bears enter the euro, right? So now we can take a look at that one again. We don't see buyers of the euro, but we do see sellers. It's not going to put you in a trade, Mike. It'll help you understand what the market is. So we see more buyers of euro right now. Sorry, more sellers of euro than buyers. In fact, we don't see any new buyers at all. Yet euro dollar's going up. So you might have a general strategy of look for places for a double top. Okay. Now remember, those are weekly moves, so day trading with weekly data is just silly, right? But, you know, maybe it could have helped you be ready for this. Right on, Ronald. Very cool. Well, Kevin, it shouldn't. It's just a long-term overview of who is buying and who is selling. Shouldn't give you analysis paralysis. You look at it for what? 1 minute every month, every few weeks, you can take a look at it. It's not analysis paralysis. Okay. So you might say, you know, this might be interesting, right? This might be interesting. Because we know if there are only bears, or if we have new bears in the market and no new bulls, and this is going up, well, obviously it's dollar related. But if suddenly the bulls exit because we hit stop losses, then this will turn down farther because we have more sellers of euro and less buyers of euro, and there's nothing holding this up. And it should fall easier than it should rise. Okay? And you'll see. Now, is it a perfect trend? No, but you could have been a bear this whole time saying, hey, you've seen the commitment of traders report and you know what the trend is. And this goes back to September, remember? Okay, cool. So like I said, it's not going to put you into a trade, but it'll keep you focused. So for example, what should you be focused on? Well, I gave you a plan A. No, I'll do it this way. I gave you a plan A on Friday or Monday, I can't remember, and this is your plan B. Okay, so most people, of course, would have forgotten about this already, and if it double tops and drops, they'll probably miss it. The question is, do you have plans that you create on Monday and carry out through the week? Can you plan it on Monday and trade it on Wednesday? It's a long time to wait. Oh, we can go to gold and oil, sure. My girl, don't you lie to me. Tell me, where did you sleep last night? In a down, oh, in a down, don't let me shine. All right, so this doesn't look good. It's not a good entry. We're not in the proper zone for nat gas. So let's get out of nat gas. Try W2EI maybe. It's a little better. Bulls are in control. There we go. So let's go through what we know. Okay. Remember, I used to have it marked up like this. Do you guys recall? Probably have it on a different chart. And we talked about it being bottom of the zone, target probably up here somewhere. So it only comes down to whether you bought it or sold it. Would you buy it now? No. That'd be extremely how do you say it? Poor decision making. Oh, right on, Ronald. Ronald's nailing it. Okay, right on. Remember, I like Cuban cigars. The Cohiba Bay Hike 58. It's my favorite. Cool. So you should be planning for this at some point. Okay? Otherwise, you're ignoring the trade plan we had down in here. Okay? This looks like it'll be an Arctic turtle, though, so it'll probably pop its head out and then back like this. The way that you trade a trend mentally, guys, is once you've identified that you're in a trend, you have to tell yourself you will be in this case, sideways trend. If you identify that you're in a range market, you have to tell yourself you are going to be in a range market forever and ever 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 until it breaks. And then what do you do when it does break? You assume it's never going to break, but when it does break, what do you do now? Trade the pullback. Okay. Well, Mike, that might be true, but we're only looking at this technically. Now, on Monday, I think when we were, well, this is Friday. So on Monday when we were here, I discussed that Saudi Arabia is dramatically and drastically cutting production from about 11 million barrels a day down to as low as 7 million per day. And the whole reason they're doing that is to get oil prices up. That's it. So we already talked about that. So there's no need for me to talk about it again. The other thing is we're in a range. The way to trade the range is to buy it at the right. And this is a monthly central. And this is a weekly swing. And it's the bottom of a range. So there were 3 technical and 1 fundamental reason to buy it here. There's no reason to buy it here except tomfoolery. Okay? Now, what I'm getting at is now if you happen to be interested in it, now after it's moved $3 or something, then the proper way of trading it now is let it head up to a point where you believe it's a technical break, let it come back to the roll reversal, and then buy it on the role reversal. There's only a right way to buy it, and everything else is wrong. Buying at support is legit. Buying at support after a breakout is legit. Everything else leads to eventual failure. Trust your analysis when it goes the other side. I'm not sure where you're going with that, Liam, but that sounds terrible. Yeah, but it's just not enough. The magnitude is not enough. So I am pro electric vehicles. They're a better design, just design-wise. They're better. I used to have a golf cart, by the way. If you go to a golf cart store, a brand new golf cart's about $5,000, maybe $6,000. Okay. I once bought a golf cart for $20,000. It was made by General Electric. It was called a Gem. So I used to drive my Gem around. Now I have a custom-made golf cart, and it's pimped out, but it's not $20,000. But my Gem was $20,000. So I've been driving electric vehicles for the last 12 years. That's way before Tesla. But as far as them taking over, or crashing the refinery business, we're a long ways from that, because they can just make, like jet planes, for example. We're all worried about, our cars, but planes are way worse than cars, and we're doing nothing about pollution from our, greenhouse pollution, but also just noise pollution and all that kind of stuff. Planes are absolutely horrific, and we're doing nothing to stop that. They're exempt. So, no. I mean, it's not going to stay the same. For example, the number of baguettes purchased per family in France has dropped about 50%. Is it because there's a bread shortage? Is it because French people are buying less bread? And it really comes down to what it means to be French is different. Right? We're not talking about little, vineyard farmers buying baguettes, or little Frenchmen eating croissant and reading the paper, or having a baguette. No, you could also say the percentage of French people eating couscous has gone up 10 billion%, right? So it's a bigger, more interesting question. What it means to be French has changed, right? More and more French people are not Franks. So, again, when we're talking about over the next 50 years, will the summer driving season change? Well, for sure. So, for example, when I turned 16, the day I turned 16, I'd be at the DMV ready to get my driver's license. My new car would be in the parking lot, and I'd get my driver's license, and boom, I'm a driver. And I got my car, drive my buddies to school, chicks would dig me, right? It defined what a teenager was. And when you're at the DMV getting your driver's license on your birthday, there would be like 50 other kids getting their driver's license on their birthday, cars in the parking lot, off they go. freedom, woo! It was just rites of passage. Kids don't do that anymore. First of all, they're poor. They're so poor they can't afford a car. Right? And then second of all, they're entitled, so like, why should they work? And then lastly, you just have Uber and stuff. Like, and you don't go to the mall and hang out with your friends anymore. You just play video games at home while you're texting and watching YouTube videos all at the same time. I gave you an example the other day, and I thought it was really interesting as an amateur economist. I went to donate a whole bunch of stuff to charity, like physical stuff for my house. And one of the things was a brand new little girl's bike. It was in mint condition. It was a beautiful bike. And he's like, not that one. Like, what? What do you mean? It's a beautiful bike. I mean, it's nice. It was a really nice girl's bike. They didn't want it. They're like, we got 50 bikes like that. No one buys them, no matter what price. Turns out kids don't ride bicycles. Why would a fat, lazy, stupid kid want to ride a bicycle outside in the fresh air in the sunshine? That's not what kids do anymore. What it means to be a kid and what children do has changed. I used to ride my bicycle all over the city. I'd ride all the way downtown when I was 12 or 13. And I'd ride my skateboard forever. Kids don't do that anymore. They're on their phone. They sit in the bathroom for 2 hours watching YouTube videos. So anyways, will the summer driving season change over the next 50 years in the United States? Well, yeah. First of all, right, 70 is the new 30. Now you go to Las Vegas and you got 70-year-old women dancing on the tables. Woohoo! I'm retired. You're like, oh, Grandma, get off the table. Party! Grandma! Put some clothes on, Grandma. I don't know. Everything is different, of course, and everything always was different. I'm just saying, yes, things are different, but other things will be different too. Yeah, those electric scooters are like garbage. They're a form of pollution. They actually bother me. Like in Atlanta, you find them laying everywhere on lawn, just laying in the middle of the grass at a park, just scattered all over up and down the sidewalks. They're a pollution. Yeah, so anyways, right? Oh, really? That's funny, Reb. 17-year-old son literally goes to the mall at the food court. Get out of here. That's so old school. They probably saw it in an 80s movie. You should, there's a website, I think it's called deadmalls.com. Pretty amazing. See these giant shopping malls all out of business. Cool. I took my daughter to a mall at Christmas time, showed her dollar store quality shoes at Louis Vuitton for $1,000. I'm like, what do you think of that? Now you know why Louis Vuitton's rich. People pay $1,000 to have dollar store shoes. Whew. All right, so anyways, WTI, not a good place to buy. But I'll tell you what, and here's the next point. So if you bought it low when we talked about it, then you did your job. This was so straightforward. I mean, dude, if you're a bull and you didn't trade that, you're missing something big time. Okay, what about if you're a bear? I would expect this to pop up, drop back down, and you should sell it hard here next week. If you're a bear. Remember, technical analysis shouldn't really tell you if you're a bull or a bear. Okay. My girl, my girl. All right. Oh, so here's gold. This was another easy one I set up for you at least on 2 occasions, maybe 3 occasions. Down, there's your double bottom, there's your higher high, here's your higher low, there's your 1, 2, 3, there's your weekly buy, there's your monthly pivot. Target is here. Not a problem. Okay. Yeah, we'll do yen next. Okay. Just reiterating these trades, man. These trades. Like, for example, let me change this back to yellow. This is a buy zone. This is a buy zone for the day. These are day trades. So this started the day as a drop and then began today as a rise. Simple day trades. If you're a bear, tomorrow's trade is like something like that, so you should probably get ready around here. Okay. Here's a roll reversal. Okay. But here's the buy 13 days ago. Check that out. I think we've covered this, but I have to do it again. So unbelievably perfect. But if you want to do it again and you want to be a buyer again, we're approaching your buy zone. Okay. So much easier when you have trade plans. So much easier. Okay. Easy peasy lemon squeezy. Okay. Notice every time like we hit a monthly area, pivot area, it stopped. Monthly pivot area, stopped. Monthly pivot area, stopped. It's beautiful. And you know it's many more than those 3. So there's the zone from before. So this just proves, because this is a different chart than the other one, we've been watching the zone for weeks now. None of this should be a surprise. But buying it now is just so lazy and reactive that you're going to have a level of such a low level of discipline that I just don't think you could survive on the long run. The zombies are going to eat you in the first season, probably the first couple of episodes. Right? Okay, yens. Euro yen. Okay. The bullish buy zone on Monday was right here. On Friday, I even highlighted it with yellow. This is the exit point. So I basically slapped you in the face to prepare you, just like I did slap you in the face for that preparation for the drop. Then I slapped you in the face here. Now what? You want another slap in the face? You slap in the face? Huh? You slap in the face? Yeah, you should get ready now. Smells like a big down day in the stock market, huh? You think the stock market's going to sell off today? Thank you, Sarwan. Sarwan. It's probably, the W is probably pronounced as a V, huh? Sarvan. Yeah. Okay. Are you a bull or a bear? Well, bulls bought this 2 days ago or 1 day ago. So if you're not long here, you must be a bear. So you need to be long between here and here. Okay, it's one of these things where you probably have already made your trade. You were either a buyer in this area or a seller in this area. And if you haven't done one or the other, you're not analyzing things properly. Thanks, Todd. McLeod, huh? Cool. Like, for example, when you were down here, if you were not a bull, you were a bear. So you would have said, well, this is plan A to sell here, and this is plan B to sell here. So you already sold it. This is the way I look at it. But on Monday or Tuesday or Friday or Monday, if you were a bull, you would have bought down in here already. That's your plan A for sure. And this last drop was probably your plan B. So if you're a bull, you're already a bull. And if you're a bear, you're probably already a bear. So it's like, well, what's left? Like, I don't know what's left. You should be getting knocked out at break even or moving your stop to lock in a profit. And which one? I don't know which one. But it'd be weird to have not done it already. I suppose you could argue as a bear that you're looking for the lower low, lower high roll reversal kind of stuff. Like, okay, yeah, you're ultra conservative. I get that. Is that right, Reb? Yeah. I was actually quoting, well, not quoting, but borrowing from I Love You Man, where he's like, you slap at the bass, you slap at the bass, like you're a bass player, you slap at the bass, you slap at the bass. No, this is a pretty quiet week except for Asia coming up, Reb. This Asia's pretty decent Asian session. Could be a good opportunity for yen to move, huh? Don't you think? You think it'd be dramatically different? if you're a bear, you would have sold there, or you're going to sell something like this, or you're selling here. Yeah. If you're a bull, you need to analyze the range. So this was Sunday. So that's easy. If you're a bull, you bought that. Or Monday, the drop allowed you to catch that. So that should be fairly easy. So you're long here, or you're selling up in here. The only thing to add is if you're a bull and you bought here, your target's up here, which would probably set up one of these things for you. Okay. So it just comes down to if you're a bull or a bear, you bought it. I mean, this is such an obvious swing trade. And this is very obvious resistance, right? So if you're a bear, you're going to use the resistance to trade back down to the support. And I'm sure you would say, well, that seems to be the support. So you're going to trade it back down to there. But if you're a bull, you want to buy a dip somewhere. Suppose, I suppose this would work just fine. Okay. What do you think? Be ashamed to just be making a decision now. I'm already looking at next week when I make these decisions. So I look at this, I'm like, well, I would like this to go up. I'm pretty concerned about the stock market though. But this is next week's buy. And so I know between now and Friday, I would love to buy a price like that. So I'm like, am I that bullish? Can it come down to here and then go bull? Yeah, maybe. But in that case, I'd probably leave it and catch it down here, which means this might go down and then back up. So I have to say, well, which one's most likely? Well, if it stays above here, I'll stay aggressive. If it drops below that, I might be more conservative, because a drop like this could mean a significant decline in the stock market and much bigger move. So I might do one shot here and then take a walk. Okay. Beast. My girl. Is that easier to see? Probably, huh? Straight up M2. So they're going for it. They're going for that on their way to M4, which is off the charts. Bears are here. Bulls are here. Pigs are here. Unless you're going to day trade this now. This was today's buy zone. Today's target is here. Yeah. Tough stuff, right? Tough stuff. Ooh, if you're a bear, you're right on your sell zone. So now you need technical analysis to confirm or deny. But bulls had an easy entry on Asia. Bears now have to set up their entry in New York. And once again, if you're not long down here or setting up a sell up here, at least on a daily basis, you're not a bull or a bear. But on a on a monthly basis, this was your buy zone. On a daily basis, this was your buy zone. If you're missing these buy and sell zones, you need to get in the game, right? The clue train is pulling up to the station. Beep, beep. Time to hop on, man. If you're missing these things, I don't know what to do for you. I don't know. You should probably watch it, Bernard. I haven't been through a Brexit before. So here we are in a 1 minute. If you're a bear, that's the kind of thing you'd be looking for. Cool. Well, that was a great day. Thank you for being on my team. Thank you for watching the video. Thank you for liking. Thank you for commenting. Thank you for visiting Trader's Way. Thank you for asking questions. Thank you for your loyalty and respect. Thank you for your patience with me yesterday, and I suppose even today, every day. I will be here tomorrow. I hope you will be too. Remember, you can download all these chart templates in the video description below. And if you need help with learning how to trade in great detail, if you want like dozens and dozens of hours of hardcore training videos on things like how to swing trade, for example, fxbootcamp.com. Peace on earth. May the pips be with you. May your profits be above average. Thank you again. Click on the Forex.Today YouTube logo to subscribe to the YouTube channel. I'll see you tomorrow. Thanks again.